It's going live. We're live. All right.
Just so you know, you can see the live on like the YouTube link or whatever. You'll see what people
Yeah.
will see.
Oh, I'm getting
Let me bring that up actually.
Yeah, I was getting a little bit of feedback, but sorry for that. Let's
Let's
I think we're done. We're ready to go.
Ready to go, huh? Well, hello everyone, and welcome to our second podcast. The crypto cave, as it were. Why don't you do the intro, Jacob?
Yeah, yeah.
You know,
Welcome
you're the
everybody.
host.
Welcome to the Crypto Cave. This is the podcast where we talk about everything that's happened on the markets recently, and so welcome every new person that is watching. Today we're joined by Yacine. He's a trader at Secure Digital Markets. We met last year. We met this year at a Scott's Mining Conference in Texas. Could you tell the viewers a little bit about what you do, Yacine?
Absolutely. Well, hello everyone. My name is Yacine, working at Secure Digital Markets. We're an OTC trading desk based out of Toronto. We pretty much cater towards mostly institutional clients, high net worth individuals, Bitcoin miners, service operators, anyone that's really interested in getting access to deep liquidity in the space. We also do a lot when it comes to lending and borrowing, where we allow multiple loans with assets, mostly asset-backed loans with crypto collateral, right? I think especially these days where Bitcoin is trading where it's trading right now, I think it's definitely a good time to consider taking loans with crypto as collateral. We're also affiliated with GDA Capital, that has their tentacles in everything crypto, right? They do a lot of NFTs through NFT Basel, which is a museum exhibition all around the world, where we display NFT arts. We replicated the traditional real estate model in order to start selling land in the metaverse. That's been working very well. And we're also working with a bunch of different projects, launching around 6 coins that should be coming to market in the next around 6 months. So yeah, we pretty much do a lot, but I'm mostly working on the trading brokerage side. So yeah, looking forward to talking crypto in the markets.
All right, thank
Great.
you, thank you. Yeah, so it's been an interesting weekend currently on the markets. You were talking to us last week, Yassine, in the chat about how the markets were going. What do you think is the current state of the market? Are we in a dead cat bounce, or are we because especially the S&P is currently going up again. I'll get that.
Yeah,
The chart.
listen, I mean,
It's having a short bounce here.
yeah, it's clearly it's risk on for now. There's no doubt about it. Depends how you see things. I mean, for traders, I think it's definitely worthwhile to go long around these levels. Equity market is strong. We're not seeing equities facing any resistance up until at least 40.90 on the S&P. We could be facing some resistance somewhat soon, but it looks like it could go slightly higher from here. I would still say I would categorize this as a dead cat bounce. Personally, I'm just bearish on the macro environment as a whole. I believe that within you could still have these bullish runs within a more bearish secular trend, and I think that's what we're seeing. If you want to compare, I mean, unfortunately for the correlation between Bitcoin and equities, right? It's really because of the equity market that Bitcoin is seeing this downward trajectory. Listen, adoption rates are high. The market is just a lot more mature than it was before. If it wasn't for the equity market, I think Bitcoin would be trading at record highs. But unfortunately, when you have institutional money come in and when the market has become a lot more mature, then there's no doubt that it's gonna definitely, be more correlated to traditional finance. So for now, I'd be optimistically bullish. I'd be cautiously optimistic, I'd say. But I would not be surprised if we make new lows in the equity markets, new recent lows in the equity market and Bitcoin. I think that we're gonna keep on, raising rates every couple of months, and at some point the market is definitely gonna feel the pain. So yeah, we're gonna go a lot of volatile price action ahead.
Yeah, what do you think about that, Rufus? You've been in risk management for a while.
I mean, I tend to agree with pretty much everything he said. As he says, as Yacine says, we're going to be seeing rates continue to rise. Rates rising means that the institutional players have to liquidate positions in order to take money out of the market and give it to the Fed. We're taking a whole bunch of cash out of the market, and that cash isn't just held in dollar bills. It's held in anything and everything, and it's got to come from somewhere. So things got to get liquidated. Um, yeah. So as people say, or as Yacine was saying, like when you have the institutional money come into the market, it's a double-edged sword. They are at the mercy of the Fed, and everything starts to correlate. Then, all assets end up correlating when the amount of money is big enough, because it's all based on how much dollars is going around. You know.
Yeah, yeah, you see a lot of, especially you see a lot of I also look at the Wall Street bet channels and stuff like that, the YOLO traders. A lot of people are optimistic currently, but that's not how the big bag holders usually like to see it. They like to pump up the market a little bit more and then maybe take it another spin downwards. That's what you see often. So
Yeah,
I'm not too optimistic about that.
and speaking of just like, bearish trends in general, if you look at the dot-com bubble, Nasdaq went down 80%, okay, and it took 2 years to bottom out. I'm not saying that's where we're going. I'm just saying within that downtrend, we had 6 rallies of around 20%, right? So it's very normal in a bearish market, in a bearish secular trend, right, that you're gonna have these rallies left and right. I don't think the market's gonna go down 80%, right? The equity market, but if you like 20%, technically I think we're S&P's down around 25%. You enter like bearish territory when you reach 20. I highly doubt that we're going to stop there. I mean, even the financial recession around 2008, 2009, we went down 55%. So I don't think with the rise of artificial growth of 0%, in which the market didn't raise rates for like 2 years, I don't think like a 20% pullback correction is going to be enough, personally.
Do you think we're going to see a tech bubble burst essentially here? I've been hearing a lot of people kind of saying that the tech bubble is about to burst. Um,
Well,
I'm kind of fascinated with that idea, the concept, because I feel like the most recent tech bubble was mostly built on actual earnings and real growth in the sector, not like the 90s where it was built on like the words.com. Um,
absolutely.
you so I definitely, I'd love to hear somebody who's more, educated or, you, you know,
Yeah.
linguistically capable, able to discuss the idea of a tech bubble bursting in the modern sense.
Yeah, it's a good point. You're absolutely right in the dot-com bubble. I mean, listen, you put a dot-com beside anything and it just popped. That's a little different, right? Internet is not new. Um, there's no doubt that there's going to be pressure, serious pressure in the tech market. First of all, when yields go up, like interest rates go up, right? It's going to hurt growth stocks, right? These technology firms are usually considered high growth. They have high debts, right? So there's no doubt that they're going to feel some pressure. Even if you look at it's very interesting to follow the ratio between growth and value stocks, and that's going to give you an idea of which one is going to outperformed. Which, for example, if you look at growth on value, we just broke below a double top pattern, meaning there's going to be a lot more pressure for growth stocks and more value towards value stocks. But to go back to what you were saying, I don't think it'll be as bad as dot-com bubble, but I think it'll still be pretty bad because if you guys remember in the last 2 years, I'd say 2 to 3 years, we had a rise of these SPAC stocks, right? These stocks
Yeah.
that come in the market with no IPO requirements, right? For me, that was really the beginning of like pressure in the markets, right? I think that was definitely the sign that like we're going way too high here, and if we're allowing a bunch of companies that come in the market with like less scrutiny, less financial requirements, then something's up. So those back stocks, the rise of like Virgin Galactic or all the other ones, for me that was a sign that something's gonna go pretty bad in the markets. So yeah, tech stocks are gonna feel some pressure. They're gonna continue to feel some pressure, but there's no doubt that companies like Nvidia, Apple, like those companies are definitely gonna survive. So at some point, when the market feels a lot better, which I expect will be sometime in 2023, maybe towards summer or the end, then it's definitely a good idea to pick up some of those big tech stocks that will most likely not die after this crash.
I mean, so we talk about tech, and then when you talk about high growth versus value, and implicitly you're discussing kind of a debt to equity ratio there on how much leverage they've got in order to grow quickly and how much you're going to feel rising interest rates. And then, but the thing is that like tech is no longer a whole bunch of tech, at least, has no leverage. In fact, look at Microsoft; they've got more cash on hand than any other company on earth, and they're tech. Like, I guess that's my question. Are we actually going to see any sort of collapse or unraveling of the big tech names? In the next, even 3 to 5 year period, would rising interest rates even be, are those going to phase your Googles and Microsofts of the world at all?
Listen, when it comes to
Yeah.
big tech, they're not going anywhere anytime soon. Doesn't matter if you want to increase interest rates at 10%. They're not going anywhere. Everyone needs Microsoft, Google, Amazon. They're not going anywhere. The real question is all those like small to even medium sized companies. Like what's going to happen with them, right? I spoke to my brother-in-law is a partner at a staffing firm. They mostly focus on technology companies, and he was telling me how there's already a lot of fear in the market. People don't want to hire as much. There's no doubt that we're already somewhat in a slowdown of hiring. So yeah, people are feeling that pressure. There's no doubt, but we cannot like it's not gonna happen. Like we're not gonna see the day that these big tech firms are going to fade away with because of financial conditions being tightening. That's not gonna happen. In my opinion, it's mostly like the small to medium sized companies, but the big ones are going to be fully functional, ready to grow on the next wave.
Yeah.
I think as well, there's a lot of bigger tech companies that are a little bit overvalued. You see, especially the new the car brands. If you look at,
The
you
electric
know,
vehicles.
Neo, what's the other one? Nikola, Tesla. It's basically the big three of car manufacturers that are so overvalued. I mean, even though they have the magic man in the front, Tesla is still highly overvalued. It's become a meme stock and stuff like that, and you know it's
Yeah.
I'm not sure if that's good for
That doesn't
stocks.
seem sustainable for sure.
Yeah, like for when I saw that stat, I think it was like 2 years ago, Tesla was worth more than all the car manufacturers around the world combined. Like that just seems a little
Yeah.
strange.
Yeah. It made no sense. But, I mean, people have lost a hell of a lot of money betting against them. And,
Oh yeah, definitely.
the reason they've lost all that money betting against them is because there's so much money to be made betting if you can time it.
Absolutely, that's true.
Yeah.
Yeah, that short squeeze on Tesla was insane. It definitely hurt a lot of people.
Yeah. Um. Anyways, on the crypto markets, we had Ethereum go below 1,000 and Bitcoin go below 20K this week. It was kind of early this week. So that's newsworthy, I suppose.
Yeah,
When
yeah.
Ethereum went down that much, it like I saw that someone, with some new crazy GPU setup, I don't know what they were doing. They had seen like you know, uh 1/7 their revenue was down by like 60, or sorry, by like 80 something, 85% from the highs. Um you know mining is certainly the backbone of the show a little bit, so thought I'd bring it back to mining a bit on that. Yeah, I mean, prices on ASICs seem to be flattening out a bit now, but they're down 90 something percent um
Yeah, that was
from what
interesting,
they
right?
were.
The ASICs were like manufactured for $3,000 and they were selling for $15,000 or something like that. It was so insane. Like right now, it's just, all the way back down to where it was like a year ago. But, people were overpaying so much for ASICs. And I mean, obviously GPUs as well. GPUs, they were paying like double for it. But
Yeah,
yeah.
double isn't nearly as bad as 10x though,
Yeah,
so
yeah, yeah.
um yeah, I'm not sure how much Yacine deals with mining. I know that you do lending with two miners,
Hmm.
and you help with mining financing, I believe, in other ways. Um, what are
Yeah,
you
we pretty much
seeing
help
from the?
them. Well, yeah, we help them with like with liquidity. Obviously, some people like to, want to have access to deep liquidity, want to get rid of it to, cover some operational expenses. Yeah, as you said, lending is pretty big for miners too, right? They really want to scale their operations, don't have too much fiat, have a lot more crypto, so that helps. And another is definitely hedging strategies. But yeah, right now with miners, we're seeing a lot of miners. It's fun. We're seeing some miners, like the big miners we deal with, they're not changing their strategy at all. They're still selling a piece crypto, but still holding some. I think the smaller miners are kind of panicking a little more and selling definitely a lot more Bitcoin to cover their expenses. I mean, everyone in the space is still bullish, right? There's no doubt, especially if you're a miner, you're not doing this to just make money and get out in 6 months. There's no doubt that there's still a lot of optimism, but at our desk in general, we're seeing retail kind of. I mean, we don't deal a lot with retail, but we're seeing more, the lower kind of investors kind of, I guess, panic a little bit. But the institutions and the big firms, the big hands, those big whales are definitely accumulating at all different levels. You had mentioned Ethereum below 1,000. Bitcoin. We were saying that our clients that Bitcoin is definitely going to touch around 18,000. So we definitely had a lot of buying volume there around those levels.
Yeah,
I
you always see that when everybody's bearish, you see the big bag holders of Bitcoin accumulating more and more. It's basically every time it happens.
Yeah, I heard that it was from a semi-credible source at best that Bitcoin miners were selling more than 100% of their earnings on average right now. I mean, I don't know. It kind of made sense to me from the principle of like ASIC prices are just so low. I could see miners unloading Bitcoin like crazy in order to acquire more hardware.
Hmm.
That said, like it also seems, with the jump in energy prices and everything that's going on, it didn't seem like the time to be, um, you know, leveraging up in order to get a bunch of mining equipment, frankly. So,
Well, I mean,
anyways,
well, it depends. Like, if you were to consider getting a loan, think about it this way. If you consider getting a loan around 60K, right? You have a lot more to go, like, on the downside, right? If you're thinking of getting a loan around, let's just say 18,000, where the market has already gone down a ton, at least 50%, and that's only year to date, right? Then you definitely have less downside, less possibility of like a lot more, disruption to the downside, right? So I think we're actually seeing some demand for lending with crypto as collateral because a lot of people want to, buy more around those levels. And when you're getting them at 18K, is it possible that it goes down 50% to 9K? Yeah, it's possible. Everyone knows everything is possible, really Bitcoin, but it's a lot less likely to go from 18 to 9 than from 60 to 30, right? So I think that's the general idea.
yeah, yeah, makes sense.
Yeah, and I think as well, if you use the collateral, if you use a loan to buy more mining machines, you basically make money while the market is moving. So,
Yeah.
you can pay off or use it to strengthen your margin and stuff like that. I think that's I mean, it's not just going to go there overnight, and if it does, everybody's screwed.
Yeah, and speaking of the idea of everyone's screwed, I think one thing that's been I'm sure you guys would agree, one thing that's very underrated in the crypto space is just risk management as a whole, right? We're seeing it with like 3 Arrow Capitals and
Yeah.
so a bunch of other companies, but specific with miners, I think it's very interesting for miners to consider hedging strategies for them to have like a reliable set of income, a lot of reliable income coming in by just being able to know what time you'd be what price you'd be buying or selling your Bitcoin at. I think that's very important for miners to consider that, especially when you're seeing a lot of volatility towards the downside. I mean, there's some option strategies that you can consider that are just that you don't even know the direction it's going to go, but as long as you know it's going to go up or down a lot, you can make money, right? You don't even have to really time, like you don't have to really call the exact price. So I think that's something that's pretty interesting to look at.
Yeah, I think that's what we're just gonna have to see what happens. I was getting some comments in my personal DMs, so I was a bit distracted. Sorry for that. Um, I think markets aside, we also had some interesting news stories these last couple of weeks. One that was a little bit older, one that I liked though, is I'm going to show you the news article, which is that a couple of weeks ago, Uganda actually announced that they had found a huge gold deposit, which I think is quite interesting. It was 320,000 tons of gold. What is what they found? So, that's not something you really see in crypto. Um, because, every 10 minutes, every 1 minute, every 5 minutes, we always generate the same amount of coins. What do you think about this? Is this going to impact the price of gold?
Well, I mean, listen, the more supply that comes in the market, it's definitely gonna somewhat impact. I have to go back to numbers and see if this amount is significant to the point where it's gonna, have an impact on the prices. But I mean, Uganda started processing the gold domestically, right? So it's definitely going to help their economy grow. And apparently they were already planning on extracting an amount of like oil reserves in 2025, which would also bring in some money. But overall, gold is still, we were talking about Bitcoin being like the perfect hedge against inflation, and recently we've been pretty much proven wrong, right? It can't be like the best protection against inflation. For now, it's gold has remained, the best inflation hedge for now. I mean, at some point, more countries are going to discover more golds. I don't think it's impossible that countries around the world are going to discover more, but I think we can all agree that it's a finite resource, right? Just like oil, it's not gonna, we're not gonna start digging gold every day for the next thousands of years. So yeah, it definitely holds into a scarcity, just like Bitcoin as well.
I just wanted to bring up the fact that I've done a bunch of whatever analysis on gold in the past and dealt with a bunch of pro gold guys. And I mean the truth is that gold inflates actually above the inflation rate of gold is above the inflation rate of US dollars historically. um I have this graph here with the gold production from 1681 to 2015, and you can see how much gold we mine every year, how much more gold is getting put into the system every year, the growth in the gold supply. And it's huge. It's huge. And, with the what we're doing with space exploration and whatnot, I mean, gold is not a very rare uh, resource outside of the planet, outside of our atmosphere. Um, it actually, an incredible amount of gold is just in the dust, moon dust. If we just got some stuff up to the moon to export it, we could, easily 10x, 100x that supply. So anyways, my point is I've always felt that gold is kind of more of an emotional trade and not nearly the inflation hedge that people like to think it is. It's more of a trade of, oh, remember the old times when we used to, use gold to value things. It was real value or something. But I mean, we're every I can't quite read that. Let me pull up that chart myself. My internet's kind of having issues, but how many tons of gold did they discover?
They discovered 320,000 tons.
320,000. So yeah, that's like a 10% increase in our gold supply. It's not nothing for sure. Um, it's about the same increases we've seen since 2012 or so. Yeah. Obviously they have to get all of it out of the ground, but yeah.
Yeah, but I agree that gold definitely has, lost more importance in terms of, that hedge against inflation throughout the years. Apparently, I think it's been, I don't know how many years, but in the recent past, maybe 10 to 20 years, or maybe more recent than that, a lot of people have been saying that it's been losing its, status as the perfect inflation hedge.
It's never outperformed government debt as a hedge against inflation, which says a lot.
That's pretty interesting. Yeah. That's pretty interesting. Uh, I also read an article about this problem with lending on the Solana blockchain. Did you guys see that?
Yes. Yeah.
I think what happened was one of the whales on Solana almost got liquidated because of his hedge, and in the end, I think what happened was they kind of did some kind of vote to overtake their There's all kinds of things happening in my house for some reason. They did a vote to overtake a whale's ability to take out to get liquidated or something like that.
Yeah.
And
Crypto communism is best communism.
yeah, it's basically they seized the means of production on their blockchain, and they just it felt so weird. It felt so
Yeah.
centralized for some reason, not really
It's
the
almost like Solana took off their mask of decentralization and were like, you know what, guys? We're not really that decentralized. When things are falling apart, we can centralize pretty quickly. And
But
my favorite part of it was that actually seemed to put a bottom in on the market. They were like, "Oh, okay, it's a centralized thing, so we're not gonna like keep shorting it."
but it does open a floor to an interesting debate. Do you prefer decentralization or user protection, right? Because let's face it, if that person were to get liquidated, if that account were to get liquidated, it would definitely create, chaos for a token. But what do you do if you really are you this is your main is the main or your main value, does it rely really on decentralization, or do you really want to be seen as a token that could really protect users? I think honestly it brings in an interesting debate, but I do agree that in general my first reflex was like, this is wrong. You can't just kind of step in and just be like, oh hey, it's decentralized when we want it to be, but today it won't be. Like that's kind of
Yeah.
a little
I, there was an interesting. They were having like a House committee hearing on crypto this week, and they had a very interesting. One of the main guys on it, the guy from Chain Analysis, had an interesting take on it. Said that basically his recommendation to the House was that if it's centralized, it should be a security, and if it's decentralized, it should be a commodity. I thought that was uh, seemed like a reasonable take to me. That
Yeah, but I remember when yeah, I agree. I think that seems interesting. But the problem is, in general, like the more that bill that we saw recently regarding potential crypto regulations, it didn't really provide much information regarding automated market making or just DeFi in general. It was very kind of weak in that aspect. It didn't really provide that much information. Don't you guys agree?
you're talking about the one that would reclassify crypto as a commodity.
Yeah, where I forgot what it was. It was a big bill that really put pressure. I think Bitcoin crashed like overnight, like at least $1,000, because the bill was, I guess, leaked, and they provided a little bit of insights as to how the government could like perceive crypto, and yeah, a lot of people were kind of disappointed because it wasn't really giving enough information in terms of DeFi, AMMs, and basically, it just looked like the people who were really creating these rules just didn't know what they were talking about crypto.
I'm not sure which one you're talking about. There was one that was recently proposed that was bipartisan. It would be a great boon for crypto if it passes, but I don't think it will. I mean, it might, but it will be slow going, and it would be a huge overhaul. And it proposed to change the regulation to a commodity, take it out of the SEC completely, and put it into you know, the the other one, the other regulator,
FTC?
I'm sorry, what?
The CFTC
Yeah, there we go. Yeah,
futures, small cap
yeah,
futures.
yeah.
Digital.
And I mean, obviously, that would be huge because it would be totally out of the SEC. Then it would be regulated as a commodity, which then in some ways it actually becomes easier to deal with. In other ways, it's like, a lot of the stuff that's been set up now would have to change and would have to be restructured. Um, so, it would definitely be a lot lighter regulation. Um, it seemed like an overall positive, but the bill was incredibly light on details. And that was the big issue, and that's why I think it's the same bill that you're talking about.
Yeah, it was.
Um, yeah, it was just like, okay, we're gonna make it a commodity. What does that mean? What exactly are you making? How is that gonna work with DeFi and everything else? And where are we drawing the lines exactly, et cetera, et cetera. Yeah.
Yeah, I think
Yeah,
one thing is for sure is 2022 is going to be the year of regulations for crypto, I think.
Seems like
yeah.
it's already headed there, yeah.
Yeah, like I can't obviously can't promise 2022, but very soon. I've said this for a couple of months now. Within the next 2 years, whether it's 22 or 23, we are definitely seeing some type of crypto regulation. I think stablecoin is a good start. Stablecoin regulation should come in. I think it can protect a lot of users, and I don't know. I think it's an easy win that the market can just digest now. DeFi is going to be very complicated, but I think they should start with stablecoin and see from there.
Yeah, a little bit of news from across the pond. Over here in the Netherlands, currently Coinbase started to every time you withdraw from Coinbase, you have to tell Coinbase basically what type of wallet it is and if it's owned by you or not. So yeah, these European regulations are getting stronger as well. It's kind of not how I like to see my crypto, but everybody knows that these kinds of things are currently coming.
Yeah, we're seeing those conversations. We're hearing about this conversation as well in Canada. I think they want to implement this new rule where whenever you cash out, you pull out crypto from an exchange, you have to provide an ID to the wallet. It has to be associated with like someone's name, and I don't know how far they want to add. Like I don't know how much details they want to add to the wallet, but apparently you have to like identify the wallet, aka like the person, maybe some kind of KYC the wallet or something like that. But yeah, definitely hope that doesn't take place.
I mean, this is why mining is so important. It's the only way to get crypto without a middleman.
That's
Absolutely.
true. That's true. Yeah. Talking about regulations, so yeah, apparently Tether prepares a full audit.
Ah, yeah. I mean, who thinks it'll actually happen? Well, we'll have to see what happens. They've been promising full audits forever, but they might actually do it this time. Who knows? They actually have a need to because um they're losing an incredible amount of market share these days to USDC, which I love. Um be, just because USDC literally is just a little bit more transparent. They actually do their audits. They're trying to be publicly traded, etc. And yeah, they've been losing. I mean, USDC is almost they're 55 billion right now versus Tether's 66 billion. And you consider that USDC is just like a few years old versus Tether being like the OG. It's what can you say? It looks like people actually do care about transparency.
Shocker. Yeah, I mean, listen, I was shocked USDT got like depegged like that. I always thought USDT was pretty safe, and then it went down to like 98, and I was like, "Eesh, okay, not that safe." Yeah, USDT is definitely the stable coin. There's no doubt about it. It held up this whole time.
Yeah, I do hope I do I do hope we can, get rid of them in the future because it's been such an, roller coaster with Bitfinex and Tether. I'm not a fan. I'm not a big fan.
And also, if you look at like the holdings, I forgot the exact structure of the holdings. USDC is holding like 96% of cash and cash equivalents, right?
Yep.
USDT was like 60 something. I forgot the table.
I think they also said
And
in there, they said like other assets without like disclosing what other assets they had to maintain their balance sheets. But I mean,
Yeah.
in the past, they've been known for, they've had their, back in the days, they've had a lot of their bank accounts seized and stuff like that. And, that's makes it all kind of sketchy. Was
And
def
they're just at the end of the day, they're not transparent. USDT isn't transparent about their operations. They're not publicly traded. They don't have any requirements and mandates to actually file and do things. And so, surprise, surprise, they don't do those things. Um, you know, yeah, what can you say? Um, USDC, obviously, they're trying to be publicly traded, good guys of it all. They uh, fully reveal whatever all their holdings, expose their risks, etc. Um, yeah. Uh, Obviously, they've been. I think there's a good there's plenty of room in the space for actors like USDC who are legitimately like transparent, good guys trying to be a bridge between um kind of the fiat world and crypto and are acting in you know with the highest level of kind of transparency that you see on the fiat side. Um, that's where those guys should be coming into the space and should be taking over the space. I think that's positive for the space. Um, you know, Obviously, bit biased. We that's my company's whole gimmick, isn't it? Like we're the trustworthy people in mining, BBB accredited, etc. A+ rated. Gotta gotta pitch my company a little bit while I'm
Of
here.
course, you have to.
yeah, yeah. I mean, you got to stay a little bit, it's business after all.
Yeah,
Yeah.
yeah.
After our other news story of this week, I think it was today, where Harmony lost $100 million in an exploit, which is interesting. You know,
I didn't get to read that one.
it's basically every other week now that 100 million or multiple $1 million get stolen somewhere, and they just I don't know, these guys, these guys that are smart with contracts, with smart contracts, they can, you know, just lift the money right from under your nose. These apparently these bridges. I think Vitalik said it in 2017 or something that the bridges between the ecosystems are usually very
Those are weak points.
they're weak points. They're an attack vector, and this is what you
Yeah, I
see every
mean,
other month.
absolutely. Listen, this happens so regularly. It's really too bad because I think these exports are definitely giving a bad image to crypto as a whole. And when these noobs or like, people that aren't really aware of crypto in general, when they read that, obviously they get scared, like, oh, maybe my Bitcoin's gonna get hacked or things like that, right? And it's just really not helping the industry as a whole. So all these rug pulls, like it just has to stop. They have to find ways to secure it as much as possible.
I mean,
Well,
at the end of the day, the issue is that like you can have one or the other. You can have a functioning decentralized secured system, or you can have something that is quick and easy to build and fast, and is fairly centralized and easy to exploit. It has anytime that something is centralized, it's open for attack vectors. And when you're interacting with crypto on something centralized, it you're literally opening yourself up for attack vectors, because the crypto isn't centralized. The crypto part, the Ethereum, the Bitcoin, whatever, the underlying layer there is going to be, once it's moved, it's gone. The keys own it. Whoever has those private keys owns that crypto, and you can't reverse that transaction. And when you've got some sort of semi-centralized system that has access to private keys that have lots of crypto, or lots of crypto flows through it, I mean, that's a big target. That's a big target.
Yeah, and I think for example, Coinbase has very strict protocols as well to unlock the customers' Ethereum and Bitcoin and stuff like that. As far as I heard, you need three employees from different types of organizations to unlock a cold wallet and stuff like that. And the problem is as well, we're just throwing our money into unverified holders of systems that they build that all of a sudden have like hundreds of millions of dollars under their butt. And yeah, what happens if someone just pulls it out and just decides to move to the Bahamas?
This dies and then comes back to life somewhere in India. I think that's something that's happened recently. Not too
Yeah,
recently.
Quadriga, is that what you're talking about?
Yeah.
Yeah. I think he has a Netflix. I think he has a
Oh, great. Love
Netflix
it.
series or documentary, one of the two. It's a yeah.
He deserves one.
Yeah, I had a friend who had like a high six-figure amount of Bitcoin who cashed out 2 weeks before, and it wasn't because he just he just cashed out because I don't know, he wanted to go to Binance or whatever. He just had his own reasons, and then that happened. I was like, wow, you lucky man. That could have been terrible.
Yep.
I mean, just the idea. I mean, what kind of risk management is that? To honestly have one person responsible, one person have that key to everyone's funds, hundreds of millions. I think it was like 250 million dollars worth at this point.
I mean, this is why, like, if it's not a decentralized system, then it's got to be like fully centralized. In my opinion, I don't like to deal with anything that isn't either totally decentralized or totally centralized. Like, I'll put my throw my coins through Coinbase or something like that. They're publicly traded, they're audited. If they're not going to disappear tomorrow, I can go sue them if something happens,
Yeah,
or I can deal with like Maker.
yeah. You want
Um,
strict protocols in place for the companies
yeah,
that actually hold your coins. You don't want someone on the street just to code a little small system and then all of a sudden have your six-figure crypto on his USB drive. That's just not how it works anymore. And yeah, I mean, you've seen that in the past with I think Cryptsy that got hacked, BTCE that got hacked, Bitfinex back in the days. In the end, it's always one of these big hacks. If it happens, you better hope. The thing is, it's gonna happen. You better hope the exchange has good security protocols so they can mitigate it.
exactly. Yeah.
But to speak about Coinbase, I mean, sure, listen, obviously they're a big exchange, everyone knows them, publicly traded, but in one of their earnings reports not too long ago, their stock dropped 20% when they revealed like a quarterly loss around 400 something million. And this was shocking. They pretty much admitted to users that the firm could basically the exchange could wipe out user funds if they go bankrupt, right? Like they could
Was that ever like not was that ever something that people thought wasn't possible? Like
yeah, I think people thought there was like some kind of regulation to protect your funds. I mean, there are, at least in Canada, I know that every user is protected by a certain amount. I don't know how it is in the US, around the world, but technically, with a fully regulated exchange, you would be protected. You would, like, they would have a, insurance
hold
to
on,
protect you.
hold on. To be clear, the situation in Coinbase is that if they go bankrupt, like because they're hacked to that extent, that their customers, particularly the ones with hot wallets that are not in their cold storage, etc., will potentially not get, that those are the funds that are exposed. They're quite open about that every step of the way. uh you know like USD is FDIC insured, but FDIC will not insure crypto. There's nobody that is going to insure Coinbase level of crypto. Um, in Canada or in America, or in any other country on earth, Lloyd's is not going to insure, uh, you know, billions and hundreds of billions worth of crypto, period.
Yeah,
Like,
that's
so
true.
at the end
I
of
think
the
that's
day, it doesn't matter where that exchange is located. It could be in Canada, could be in the Netherlands, and it can be in America. If they are hacked to death, they're not going to get you're not going to get all your funds back. Um, period. Like you might get some portion of it, depending on the place and the insurance that they can get, but I don't really think they can get any insurance for hot wallets, hot trading wallets. I don't know of anybody that'll insure that.
no. I think the private custody firms could, like, have some insurance, right, on the coins that you have in custody with them. But these exchanges, I don't think they would offer like those types of insurances.
I mean, so Coinbase does offer some custody solutions. Like they have something called the Vault. It's a cold storage custody solution that they touted for a long time. And I mean, I believe they insure it, but they don't have a real good guarantee on how well that insurance will actually operate in case of, you know, something crazy going down. And we just don't know because we've never had to really deal with insurance and reinsurance and $100 billion event in crypto that dealt with insurance. We've never seen how that goes through the court system before, so we have no clue what'll happen.
But you
Um,
see things like that, like for a company to kind of like innovation in the crypto space in terms of insurance, user protection, like these are elements that will really help fuel the global adoption, right? These are elements that will really help the banks start offering crypto products to the users. Like this is something that's pretty important to in order for companies around the world, like banks and trade finance institutions, to start offering crypto to their clients. I don't know, I think it's something that people should address right away.
I mean, I think that this is room for regulators actually, and
Yeah.
something that like they really should do. What we really need to see is a law that uh says that basically firms can't discriminate against crypto firms, but like banks and insurance agents and insurance brokers, etc., shouldn't be allowed to discriminate against crypto firms, and they're allowed to price things, but they can't do what they're doing right now, which is just denying service to them.
Yeah.
and that would force them to then competitively price for these crypto firms. They'll have to, like, compete with each other at least. It maybe the rates may be horrible, but at least there'll be a marketplace then. Right now, if we try to go get insurance, most people just don't, will just say, oh, well, sorry, we don't deal with you. So we have to go to like one guy who does, and he charges whatever he wants.
We see that as well a lot with obviously we sell services, but because we have crypto in our name, even though we basically if you look under it under a loop, we basically only do if you look at us under a magnifying glass, we only sell machines that we host, so we're basically only a machine hosting company. But because we have crypto in our names, the big credit card companies don't want to deal with us. And that's a pain in our butt always, yeah. But in lighter things, I think we should, wrap it up a bit. We've been
Yeah.
talking for quite some time already. And yeah, I'd like to, end it with this, my favorite article of the week.
Yes.
Jim Cramer, which
Jim,
he told everybody.
As a finance, as a guy with a background in quant finance, like the fact that he is allowed to be on air, I feel, MSNBC should be held criminally liable for everything this guy says. For all the money that he's lost investors over his lifetime. It's ridiculous.
Isn't there an inverse Jim Cramer strategy where you
Yes.
where I think you outperform S&P by 300% or something like that.
I believe that it does beat the S&P, yeah.
Yeah,
should
yeah.
hopefully make an inverse Jim Cramer ETF. That'd be amazing.
Yeah, that should be awesome. Yeah. It's just like I was reading a while back that JP Morgan was telling investors that it was telling investors they made a video about it being wise again to invest in Chinese stocks. And my only thought is like, you're probably sitting on way too much Chinese stock that you need to sell. It's like,
There you go.
yeah.
I wouldn't mind seeing a 3x long Nancy Pelosi ETF. That'd be pretty nice too.
Oh yeah, that would be
She
great.
was selling right before COVID. She sold a bunch. Her and her husband. I mean, she definitely seems to be a good. She's good with market timing.
Yeah.
And market timing or market, tips.
Listen, I don't want to speculate. I'm not trying to get sued here.
Yeah.
I mean, the truth is that they do look at all the other officials and their portfolios, and most of them way underperform the S&P, which I find ridiculous. Like they literally have all this information about what's coming on regulation. They still underperform. At least she's seems like she knows what she's doing, but I think that says more about what kind of idiots we got up there in Congress than anything else.
Yeah, I just hope when it comes to drafting, like like very clear, transparent crypto regulations, I really hope that they're consulting with the public, with crypto professionals, because sometimes when you look at the wording or when you hear the like Senate hearings and everything, sometimes you're quite shocked that some of these politicians are going to be the ones that are going to draft a crypto regulation bill when like they really just know absolutely nothing about it. So truly hope that they consult the real professionals.
Yeah, we're got to do my mandatory pitch on Basic. We're supporting Basic blockchain, the industry nonprofit for cryptocurrency miners, proof of work supporters, etc. And they're helping various state legislators and federal legislators draft legislation. And any support you guys can give them, the more support they get, the better. I think we're gonna probably do a bring their president on here, maybe next week or the week after for as a guest as well.
Yeah, it sounds interesting. I put a link in the chat.
Great.
Yacine, thank you very much, my man. I'd like to thank you for joining us in such a short notice. For the people just tuning in, we basically what happened was we had our friend Phil. He couldn't be here at the moment, and we had to scramble for someone to fill in. And because Yacine was on our chat the last time, we decided to invite him. So thank you so much.
So we killed the chat. It became a lot less active.
Listen, the pleasure is mine. Thank you very much for inviting me, guys. And I'm always interested about talking about financial markets and crypto as a whole. So next time you guys want me back, I'm here.
Wonderful. It's great to have you.
Thank you very
Thank
much.
you very much.
All right, guys. So if you enjoyed this podcast, please don't forget to like and subscribe, and we'll see you guys next week. Thank you.
You going?
Bye, guys.